Hi and welcome to Selangor ASEAN Business Conference or SABC's first webinar series. This webinar is a monthly webinar series that will be organized from the month of August until December 2020, together with a hybrid one-day conference on the 14th of October 2020 in Kuala Lumpur. This Selangor ASEAN Business Conference is part of the annual Selangor International Business Summit and International Trade and Networking Initiative by the State of Selangor through its investment promotion agency, Invest Selangor Berhad. Our SABC webinar today will be discussing on a hot topic entitled ASEAN Rebound to Recovery, which focuses on the current regional economic distress resulting from the COVID-19 pandemic. Before we continue with our webinar, allow me to make a little housekeeping announcement. If you have any questions during the presentation, please type them into the question box in the portal control panel. I'll bring them up during the presentation, and we will also have time for questions at the end. Ladies and gentlemen, we are pleased to introduce our moderator for today, Mr. Richard Record, Lead Economist for Malaysia, World Bank Group, Macroeconomics, Trade and Investment, Malaysia. And our panel of speakers today will be Mr. Tan Soo-Ee, Managing Director, China ASEAN Investment Corporation Fund, Hong Kong, Mr. Sudip Banga, Managing Director, International Data Corporation, IDC ASEAN Malaysia, and Professor Dr. Jamal Othman, Professor of Economics at the Center of Sustainable and Inclusive Development, Faculty of Economics and Management, University Kebangsaan Malaysia. But before I hand over the webinar to our moderator, please allow me to invite our guest of honor, Yang Berhormat Dato' Teng Chang Kim, Executive Councillor and Chairman of Standing Committees for Investment, Industry and Commerce, and Small and Medium Enterprise SME Selangor, Malaysia, to give his opening remarks.
Mr. Richard Record, Lead Economist for Malaysia World Bank Group, Mr. Tan Soo-Ee, Managing Director, China ASEAN Investment Corporation Fund, Mr. Sudip Banga, Managing Director, International Data Corporations, IDC ASEAN, Professor Dr. Jamal Othman, Professor of Economics, Center for Sustainable and Inclusive Development, Faculty of Economics and Management, University Kebangsaan Malaysia. Ladies and gentlemen, a very good morning everyone, and welcome to our much anticipated webinar series, the Selangor ASEAN Business Conference Webinar Series 2020. I would like to thank all viewers for these sessions, and especially the speakers who are with us today, for embracing this new norm in attending seminars, conferences, and knowledge-sharing programs. I do hope everyone is in good health and taking all the necessary precautions to stay so. And I also hope everyone is facing the impact of COVID-19 pandemic with strength and perseverance. Selangor ASEAN Business Conference is a conference that Selangor organizes annually to bring together prominent speakers, business leaders, trade-related associations, and trade policy makers with diverse background from ASEAN and ASEAN Dialogue Partners countries. This year, due to the current health reasons, we are adapting our approach in delivering the contents to the audiences while maintaining our objectives and visions of the conference. And I believe moving forward that this will be the trend and way of delivering and sharing knowledge and experience to our target audience. Although the digital communications technology has been in the market for quite a while, the COVID-19 pandemic has really pushed all of us to embrace digital platforms as a more viable channel for communications. In addition, digitalization is also proven as an enabler to assist businesses to absorb and fasten the recovery during this pandemic. At the same time, we believe that SABC is also an appropriate avenue for us to address the current regional economic issues as a result of the pandemic and share the viable solutions. It has been more than half a year since the start of COVID-19 pandemic, and here in Malaysia, we are still in the Movement Control Order, MCO. Today, our three distinguished speakers will share their points of views on how ASEAN as an economic community will be able to capitalize on our inherent resilience to rise and rebound from the economic doldrums. Despite the uncertainty and complications, I believe ASEAN as a region will still be able to maintain relevant and strong with an abundance of resources, positive business ecosystem, talented workforce, and a huge market of more than 640 million populations. Over the course of 4 webinars and a full-day conference scheduled in October 2020, Selangor ASEAN Business Conference will continue to be the engagement platform to share and discuss the challenges and opportunities which hopefully will pave the way for a more comprehensive recovery for all of you. Ladies and gentlemen, envisioned as a gateway to ASEAN, the state government has invested significantly to showcase Selangor as a premier regional economic, industrial, and business hub. This has led to the state organizing the Selangor ASEAN Business Conference annually as part of its globalizations and trade initiatives. Selangor as a state is Malaysia's economic powerhouse and has been growing higher than the national average annually, with our contributions of over 24% to Malaysia's GDP in 2019. Selangor is also the more strategic investment destination in Malaysia, complemented with a comprehensive infrastructure, equipped with excellent ICT facilities and business-friendly environment. In addition, Selangor also has the largest talent pool of about 3.6 million, with over 60,000 graduates from 160 higher learning institutions in the state. Selangor ASEAN Business Conference will continue to create opportunities for Selangor to form strategic alliances to accelerate economic recovery and subsequent growth with the region. It will also be a catalyst for new investment from around ASEAN to strategically take root and expand in Selangor. Finally, I wish all the best to the panel of experienced speakers today, and I would like to invite everyone to actively participate in these sessions. I sincerely hope that we will be able to engage and discuss the topic successfully and to take home some key learnings from this webinar for our future benefits. Thank you and have a pleasant day ahead.
Thank you, Yang Berhormat Ting, for the wonderful remarks. Now I will pass the floor to our moderator, Mr. Richard Record.
Good morning, everybody. So my name is Richard Record. I'm lead economist for the World Bank here in Malaysia, and it's my privilege to be a moderator for today's discussion. As Dato' Tang mentioned, COVID-19 has been an unprecedented shock, which has had major health and economic implications right across the world. In fact, from the World Bank side, our estimation is that 90% of the world's economies will see a contraction in 2020. However, this region in ASEAN, while there's been some exceptions, has actually suffered less from COVID-19 and appears to be recovering faster than other parts of the world. In fact, efforts by governments have helped, timely and large-scale efforts by governments have helped households to smooth consumption and firms to avoid bankruptcy, although it has been at a significant fiscal cost. So I think we're increasingly looking towards the prospects for recovery and for a rebound, and this is really the intention of today's panel. We're seeing with successful containment, the revival of domestic economic activity right across the region, but there's still an awful lot of global uncertainty, and that's particularly important given the region's dependency on trade and tourism. So we have 3 excellent panelists today who have different perspectives, who will hopefully share some insights in terms of the prospects and policies that will be needed to ensure that we can see a successful recovery and rebound in Selangor, Malaysia, and ASEAN. I would also stress that we have today's session is intended to be an interactive one. So please, those of you who are listening in or participating, please do send your questions through our different channels, including through Zoom, Facebook, and we'll do our very best to agglomerate those questions after the 3 presentations and see what we can address in the discussion of the final session of today's event. So without any further ado, let me hand over to our first panelist, Mr. Tan Soo-Ee, Managing Director of the China ASEAN Investment Corporation Fund, for the first presentation in today's session. Thank you.
Thank you, Richard. Good morning, everyone. For the next 15 minutes or so, I'll be touching on the topic of China outbound direct investment, or ODI in short, and how ASEAN can position itself for recovery after the COVID-19 pandemic. The first part will be an attempt to peek into the future of China ODI trends based on the observations and lessons learned since China embarked on the going out policies 20 years ago. In the second part, we will discuss the likelihood of China stepping up its overseas investment today, repeating what they did during the global financial crisis to take advantage of the attractive valuation and M&A opportunities created by the COVID-19 crisis. In the last part of the presentation, we will look at how China and ASEAN as a region can position itself to expedite the recovery from the COVID-19 crisis and be attractive to FDIs. In the last 2 decades, China ODI is really one of the mega trends that has significantly changed the global business and geopolitical landscape. This is certainly in conjunction with the rise of China to be the second largest economy of the world. Now you can see from the chart on the left-hand side, the yellow bar, that China ODI has increased exponentially since early 2000. Based on the 2018 data, China ODI stock, which is total cumulative ODI made by China, was 1.9 trillion. This is 6.3% of the global ODI stock. Compared to the year 1990, China ODI stock is just 0.2%. So throughout this 20-year history, China has launched a number of national initiatives to promote outbound investment. This includes the Going Out policy in the late 90s and the more recent Belt and Road Initiative, or BRI in short, and Made in China 2025. One of the China main ODI strategy is to target natural resources which are not readily available in China. We believe this trend will continue in the future, even as China upgrades their industrial value chain. We should expect China to evolve from the factory of the world producing low-end products into a more technology-intensive powerhouse, producing higher value products. For example, China is now the largest electric vehicle EV market of the world. That accounts for more than 50% of the global market share. This has given birth to very large EV battery manufacturers in China, which now ranks among the top 10 in the world alongside Panasonic and LG Group. According to Bloomberg projections, by 2021, China will produce 70% of the world's electric vehicle batteries. So far, Indonesia is the biggest beneficiary because it has a large deposit of high-grade nickel reserve. It has attracted multi-billion-dollar investment by Chinese companies such as CATL and Tsingshan Group to produce battle-grade nickel batteries. We are also of the view that ODI trend by Chinese bank is expected to rise given the greater overseas investments and presence of Chinese company. As more and more Chinese banks and Chinese company embark on overseas ODI, the financing requirements of their overseas operation will also become more sophisticated. This goes beyond the initial project financing, but to other banking services such as treasury products and trade facility. To service such banking needs, Chinese banks would need to expand their overseas presence either by establishing a bank branch in those countries or acquire an existing bank in that country. In recent years, Chinese banks have been taking very bold steps in acquiring overseas banks. In 2016, state-owned China Construction Bank acquired a 60% stake in Bank Windu, a mid-sized bank in Indonesia. So these acquisitions provide CCB with more than 100 offices in Indonesia. In 2015, ICBC Bank, another state-owned bank, acquired a controlling stake in South Africa Standard Bank. This allows them to capture the China-Africa trade and investment flows, which amounts to more than 200 billion in 2018. In Malaysia itself, CIMB has also sold its security businesses to China Galaxy Security, which is a state-owned company in China as well. In the past decades, the flow of goods and technology in China ODI is more inward from overseas to China, especially with the strategy is to acquire natural resources and technology. This is evident from China billions of dollars of investments in mining projects from Africa to Australia. Similarly, in the semiconductor sector, only 16% of the semiconductor used in China are produced locally. This has led to many billion-dollar attempts to acquire semiconductors companies from Europe and the US. In all these cases, the flows of good technology are largely from outside of China into China itself. However, the more recent Belt and Road Initiative infrastructure projects and outbound investment led by the China tech giants, such as the Alibaba and Tencent, are now reversing the flows of goods and technology from China to overseas. In the BRI projects, for example, they are exporting their infrastructure expertise to the developing countries. These infrastructure projects require the Chinese company not only to commit significant amount of capitals, but also project expertise and human talents to the host country to see the projects to fruition. Similarly, when Alibaba built its logistics center in Malaysia and data center in Indonesia, the company is exporting their technology expertise to build the market presence in these countries. So the trend of outward flow in goods and technology in China ODI will definitely become more prominent in the future. This is riding on the more mega BRI projects, as well as increasing number of outbound TMT deals. We are also expecting China to place greater importance on environmental impacts and sustainability in their ODI projects. During the second Belt and Road Forum in Beijing in 2019, President Xi keynote speech advocated the need for the BRI to create green and sustainable infrastructure. As a matter of fact, China has the most valuable first-hand experience in understanding the cause and impacts to its environment when the country relentlessly pursued its high economic growth in the 90s. Chinese regulators have also launched a number of policies to encourage investment and financing in tackling the environmental issues and also promoting green financing. Many of the developing countries are struggling to balance the environmental costs that are attached to economic developments. So China is very well positioned to demonstrate its green leadership here by transferring its experience in tackling the environmental issues of these projects. By adopting such an inclusive and also comprehensive approach in these projects, it will go a long way to improve China's reputation and leadership at the global stage. Apart from having the third largest population in the world, ASEAN is attractive in the sense that it has a young demographic, growing middle class, strong economic growth, rich natural resources, high growth in digital economy. Therefore, as far as China ODI is concerned, ASEAN is a low-hanging fruit, not only because of the geographical proximity to China, but also the long-standing historical ties. While the developed markets like US and Europe are stepping up their scrutiny of China investments, most of the ASEAN countries have been maintaining a rather healthy diplomatic relationship with China for a few decades now. From a geopolitical standpoint, the connectivity with Southeast Asia allows China to reach the South China Sea by land routes if there is a potential naval conflict. This can be a strategic hedge against the United States' dominance on the South China Sea. In this section, we will explore whether China is likely to repeat their act during the GFC in 2008 in stepping up their overseas acquisitions after this COVID-19 pandemic. China was the first country to be hit by COVID-19 outbreak and to suffer its economic impact. In China, the level of M&A transaction has dropped very sharply. Total announced deal volume in the first quarter of this year has dropped by more than 50% year on year. On outbound investment by Chinese company, first quarter will show the lowest deal volume in almost a decade. As China economy is gradually coming back up, we will probably see some recovery of outbound investment activity in second half of this year. Question is how much upside there is from this low base. After the GFC crisis in 2008, Chinese companies venture out actively to actually acquire discounted assets around the world, especially those in the natural resources and financial sector. Since China economy is having a head start now, coming out of the COVID-19 crisis, will history repeat itself given their persistent appetite for technology and other strategic assets? I think the most important variable to consider is actually their domestic policy that were put in place since 2016, when ODI is actually at the peak. The three policies are: number one, the tighter administrative control in terms of the capital outflows. The second one being a crackdown on irrational outbound investment. And thirdly, a broader campaign to actually reduce the leverage in the domestic economy. These three policies have actually led a very sharp downturn in outbound M&A from China since 2016. The balance of payment data, as the chart can show, this rule has been very effective in curtailing capital outflow. From 2014 to 2016, China recorded an average of 43 billion of ODI outflows. After this measure were imposed, outflow was reduced to an average of 28 billion per quarter. Also starting in 2016, China launched a deleveraging campaign to control excessive borrowing. They heavily clamped down on shadow banking and tightened the money supply. This tightening of liquidity affected the financing capability of the higher or highly leveraged outbound investors. We believe this condition and policy measures will remain in 2020, and they are not likely to be revised or replaced just to promote ODI now. Firstly, compared to the GFC crisis, I think the room for a massive monetary and stimulus response for COVID-19 crisis is more limited today due to the deleveraging campaign in China. Secondly, the external situation today remains volatile. China has learned the painful lesson during the GFC when they invest too early before the market hits the bottom. Thirdly, COVID-19 may not disappear completely in the future. And not only that, I think the world has yet to see a recovery of trade flow, which was disrupted by the US-China trade war. Lastly, but importantly, Chinese currency, renminbi, has been under depreciation pressure as households and companies in China still remain eager to move money offshore. All these factors will prevent Beijing from relaxing their stance on investment capital outflow that really prevailed during the boom years all the way up to the peak in 2016. In addition to the domestic policy constraint, the Chinese companies are also facing a very different international environment today compared to the GFC. One of the key differences today is that the governments in most developed markets have been able to quickly and aggressively respond to the crisis. Many governments provided immediate relief to the banking system and provided emergency funds to the most impacted sectors. In the US, Federal Reserve pledged unlimited asset purchases in addition to cutting the Fed fund rates to near 0%. There's also a $2 trillion stimulus package to help to stabilize the US economy. The same thing is happening in other countries such as Japan and also Europe. So although many companies will still struggle and under deep financial pressure over the next few quarters, but there's certainly a much lesser pressure for such companies to find white knight to save them from going under, given what the various central banks and government have done. Even before the pandemic crisis, many countries have stepped up their scrutiny on foreign acquisitions of sensitive and critical assets. During the COVID-19 crisis, many developed countries have said that they will take extraordinary measures to protect their local companies from foreign takeovers. For example, the European Commission issued guidelines for more stringent investment screening to protect critical European assets and technology during this pandemic crisis. German government officials said the same thing. They will take measures to avoid a sellout of German economic and industrial concerns during this crisis. The other thing to bear in mind is that in the current environment, any high-profile Chinese acquisitions may run into the risk of a PR disaster for both sides. Beijing is fully aware of this risk and would want to take measures and intervene to prevent such outcome. However, certain Chinese investors may step up in coming months. These are investors that are quite well funded, and they'll probably target the small and medium enterprises in countries that have less stringent screening criteria and have more friendly relations with China. So in a nutshell, my take is that because of the domestic policy restrictions and macro conditions, as well as the greater investment scrutiny by overseas countries, it will be very challenging for China to repeat what they have done during the GFC. Now, how ASEAN can position itself from recovery during this pandemic crisis? COVID-19 is really a wake-up call for countries around the world that they have become over-reliant on China as a manufacturing base. When China went into lockdown and its factories are shut, supply chains and logistics were deeply disrupted. And many countries suffer as their access to goods were cut off drastically. In response, many nations have decided to bring their manufacturing back to their own shores or to seek alternative manufacturing base, partly also because of the US-China trade war. ASEAN can capitalize on this strategic move by positioning itself as the alternative manufacturing base. This is leveraging on the relatively well-established manufacturing supply chain in ASEAN, their natural resources, lower labor costs, and also its free trade agreements with many countries around the world. But ASEAN countries need to work together, capitalizing on each other's strengths. For example, Singapore can focus on R&D and prototyping before the mass production is being carried out by the neighboring countries in Vietnam or in Thailand. In that case, although no single ASEAN country can replicate China as the factory of the world, but by collaborating as a unified bloc, ASEAN as a region can be a competitive manufacturing base. The other area where ASEAN needs to invest for recovery is really its infrastructure. Without a robust infrastructure, not only the growth of the economy will be affected, but it's not sustainable as well. This shortcoming is exposed during the pandemic crisis. Many ASEAN countries and governments are also looking at fiscal stimulus to pump prime the economy. Countries like Indonesia and Philippines have actually started their massive infrastructure ambition even before the pandemic. The pandemic also exposed the urgent need to build not only the urban infrastructure, but also the digital infrastructure. This includes better mobile coverage, data center, fiber optics network. In all these contexts, China has an unparalleled track record in the world in creating what they call the infrastructure miracle in China in the past 30 years. China can be a partner of choice for such infrastructure build-out in ASEAN, providing both the technical expertise as well as the financing support. In the past, most of the infrastructure projects in ASEAN are being led by SOE, or state-owned enterprises. As a result, many of the SOE are also stretched in their balance sheet. Other than asking the state government for more funding, which in itself is very challenging today, given the government's urgent needs to allocate funding to provide financial relief to businesses and individuals during this pandemic. I believe ASEAN countries need to accelerate in diversifying the participation and funding sources for such infrastructure projects. This includes encouraging private sector and financial institution participation, creating the optimal legal framework, and the financial incentives for them to do so. SOEs can also recycle their capital by divesting the more mature infrastructure assets to either strategic or financial investors. For example, Indonesia has proposed a limited concession scheme, LCS, which is in the right direction towards capital recycling, where the SOE are actually divesting their more mature assets for the private sector to manage for a fee. Compared to SOEs in China, ASEAN SOE are definitely less active in accessing the international capital markets. Other than access to offshore funding, such access to capital markets and this exercise can help ASEAN SOE to promote their visibility, transparency in their credit standing, and also governance. This will certainly generate more comforts among the foreign investors to explore JV or collaboration with them. And finally, on food supply security, Again, the COVID-19 is a wake-up call. Yes, we all need the face mask and the hand sanitizer, but without access to food, we wouldn't last for too long. ASEAN is obviously one of the most productive agricultural baskets in the world, and this is one of the most traditional and established industry in the region. After the COVID-19, many countries are rethinking strategically about food supply chain, from upstream availability, access, storage, and logistics. ASEAN can leverage on their agriculture basket status to attract other countries to work with them to further modernize the agriculture sector and supply chain, improve productivity, and obviously create more jobs for the people. That pretty much concludes my presentation today on this topic. I will stop here and more than happy to answer any question during the Q&A session. Thank you.
Thank you, Sui. That's a fascinating presentation. And I'm sure if, like me, you have questions at the ready, please do hold on to them or send them through our channels through Zoom or Facebook, and we can try to answer them at the panel discussion at the end of today's seminar. And clearly, as I mentioned, our expectations in the World Bank are that 90% of the world's economies will see a contraction this year. China, of course, is one of the big exceptions. So clearly, if we're looking towards a recovery and a rebound in ASEAN, the extent to which countries in this region can both learn from China, trade with, and be part of that success will be a key factor in the recovery of the investment and trade trends in this particular region. So one of the next major trends we've all been discussing about ASEAN's rebound and recovery is the extent to which digitalization can be accelerated. And of course, the very fact that we're holding this year's event virtually and online is just, and the fact that we've all become so accustomed to having these type of events online, I think is just one of the various dimensions we've seen about digitalization changing both the world of work, education, and the lives we live. And so with that, perhaps I can hand over to our second speaker, Mr. Sudev, who of course is Managing Director of International Data Corporation, ASEAN, and is going to share some insights from us on the role that digitalization can play towards ASEAN's economic recovery and rebound. Over to you, Sudev.
Thanks very much, Richard, and I appreciate being on this forum and panel. It's always very exciting to engage with everyone, albeit through a digital means. My name is Sudev, as mentioned before. I'm the Managing Director of IDC ASEAN International Data Corporation. We're a market intelligence firm, and what has been very relevant today has been the fact that the digital economy is on the tips of everyone's tongue. And right now, for economies, in order for them to strive and thrive in a point where the pandemic has impacted so many businesses, I think it's very important for us to discuss how digital is going to be able to support the businesses of Malaysia today and in ASEAN in general. So if we want to talk about a manner of how digital is going to be able to support businesses, whether in ASEAN or in Malaysia particularly, we feel that business resiliency is going to be the new word of the day for all of you. I think for many of you, you've heard the term unprecedented, you've heard the term pandemic, you've heard the term new normal or even next normal so many times. However, business resiliency for us in IDC is what's going to help your organization to come out of this pandemic over the next 6 months to be able to reinvent towards 2021 and beyond. So I think it's really important for us also to now look back and see how the journey has been for many organizations, many individuals across different regions. And IDC, we took what is called a very unprecedented step as well at the start of this year in January, when the pandemic first hit and it was first announced and everybody started looking at how serious this could be. And we began to track the market on a bi-weekly basis. We actually started going out there and trying to refresh our data to understand what is causing a concern for all of you sitting out there. If you take a look at this slide and you take a look at this index, since January till now, you can see the confidence level of a lot of individuals, organizations across the region go up and down a little bit, especially when it was really heavy and all the lockdowns were occurring, especially in ASEAN in March and April. You can see the consumer confidence and enterprise confidence in terms of spending on technology was very, very low. There was a huge dip in April. However, we saw a slight recovery coming back across in May, which still represented the highest confidence point, and then taper off a little bit to June, July, and now into August. The reason in May why there was a bit of an uptick was because there was a recovery in China. We saw many other Asia-Pacific countries emerge out of the pandemic, but there was a lot of concerns over a potential second wave. And you can see that this has impacted the US worldwide and the European region in a large way, showing and owing towards the lack of confidence in spending and technology spending towards the end of this year as well. Now, why this is important is because for us, the digital economy is and was on the horizon. I think if you track back 10 years ago and you talk about the digital economy, or even 20 years ago and you talk about the digital economy, very few of us could fathom the idea that an organization or a traditional organization, whether in retail, whether in manufacturing, whether in a very typical F&B organization, that digital would have played such a critical role in the emergence of the GDP. Where if you look at this stat and our forecast and how we feel digital is going to play a very critical part, is that more than 50%, 51 to 52% of the GDP of the globe will be driven by digitally transformed organizations by the year 2023. Why is this important? Simply because when we stare at organizations and the evolution of organizations in ASEAN, we are seeing more discussions occur around them wanting to piggyback on digital means in order for them to thrive, to find new customers, to change markets, to be able to address changing markets, and to expand into geographies that they otherwise couldn't have. So more and more organizations we are seeing in ASEAN are starting to look outside of their borders. They're starting to look into how they can collaborate into different ecosystems and thrive in different economies as well. A lot of this is enabled by digital. And majority of countries, when they talk about Industry 4.0, for example, they are talking about the digitalization of organizations to be able to thrive in such an environment. Now, CEOs of leading edge organizations have been talking about this for the longest time. If you look across in these four pillars you see here, the fundamentals of a digitally enabled organization is one which is able to react towards new customer requirements, one which develops new capabilities within the organization, moving away from very traditional manners of operating, one that develops new critical infrastructure, one which is agile, one which is stable, one which is scalable, to be able to support the different technologies required by these organizations to expand. And of course, for the many of them, we are talking about new ecosystems being very critical as well. And new ecosystems here is creating a digital trust partnership ecosystem. And to come to realization as an organization, I don't always have to rely on myself acquiring and developing, whether it's new skill sets or innovation, but more from a shared perspective within an ecosystem, industry ecosystem, that I'm able to leverage upon my partners. Now, these discussions have been going on for a while now. And as we now look towards the pandemic and how this has rocked everyone's business, rocked the organization, rocked many economies, we are seeing now more and more organizations trying to come up and look towards data as a fundamental way for them to gain insights on their business and where their business should actually progress towards. Business operations and resiliency programs, as I mentioned, the word of the day for you today is business resiliency. Why is that so? Business resiliency ultimately is going to form the core of your organization to survive towards 2021. Business resilient organizations are data-driven organizations. They create digital trust programs. They are able to develop and innovate on their own, and they are able to then stand up, hypothetically, if a second or third wave were to occur, the business continuity aspect will still be able to be staved off. They'll be able to continue their business and not get caught out. Majority of the discussions we've been having right now has been from a reaction to the crisis, now in August is moving towards the race to recovery. Now, when the crisis first hit, a lot of the discussions was the need for them to be in sync with business goals, with the CEO, to ensure that whatever was being done is going to have a very legible outcome for the business to continue. Majority of those which we've spoken to in the April-May period, in fact, from the March, April, May period, in Malaysia and across ASEAN, I've had the opportunity to speak to many CEOs across Southeast Asia. The first thing that they mentioned was the fact that they were caught off guard. And moving towards the race to recovery, and you can see on the broader, onto the right-hand side of the spectrum, you would realize that majority of these organizations are suggesting that they do not want to be caught off guard again. When we stare at Southeast Asia, we stare at ASEAN, and if you look at this red box that I just pulled out, majority of the conversations are now still sitting squarely in the middle. We have Singapore, Malaysia, and Thailand who are perhaps talking a little bit more about recovery, but we do have countries like the Philippines and Indonesia who are a little bit more towards the middle and the earlier part of the spectrum. Reason being, unfortunately, the pandemic and the rate of infections in those countries are pretty high at this point. And although a lot of effort is being put into trying to reduce the rate of infections, as well as quarantine measures to ensure that the community is guarded, however, there is some lack of confidence in being able to ramp up at this point in time in their business to really accelerate. Now, you talk about some of the countries who are able to then stave off some of the infection rates, reduce that, flatten the curve, then these are the ones who are now racing to recover. And these are the organizations, if you have discussions with them, are talking around business resiliency. They're talking about the need to then plug the gaps of technology, using technology to plug the gaps in terms of their lack of driving towards business goals, and to utilize technologies as a mean to expand their markets. So these are the discussions we're hearing today. ASEAN organizations at this point in time, they are shifting towards what we call targeted investments. In Q3, Q4, we see a lot of attention now being put into the areas of cost optimization, business resiliency, as well as targeted investments. The statistic you are staring at right now on this slide is an ASEAN level statistic that shows 14% of organizations we are talking to are surrounding the area of cost optimization. Now, if you look at this similar statistic just 2 months ago, you would have seen cost optimization to come up very strongly around the 30 to 40% mark. But we're seeing the shift and the transition of these organizations move towards business resiliency as well as targeted investments. The ultimate goal of this, the shift towards the right-hand side, and for us in IDC, we're talking about the flattening the curve, the opposite way, upwards, to ensure that these organizations continue to be able to buoy their business. And the shift towards the next normal is the ultimate goal of being a future enterprise. And since majority of the audience here could be, will be from Malaysia as well, sharing a little bit of a Malaysian-centric statistic for you that shows that organizations in Malaysia are looking more towards targeted investments towards the fourth quarter of the year, where they're starting to look at cloud technologies, for example, business analytics, or even support functions that were unable to function during the MCO period in March and April. Things such as legal, procurement, administration, simple things like getting a digital signature or stamping. A lot of organizations in Malaysia are starting to look at that fundamental need their businesses require at this point in time to continue towards the end of the year. So ASEAN organizations are starting to have a view of what the future enterprise is all about. And these are some of the discussions I have had with CEOs and businesses across Southeast Asia. From a private university, which was very hard hit by this pandemic in Malaysia, who said that we need to then transform towards a digital way of continuing to educate our students, to bring our students together, to connect them, and also at the same time, upskill our lecturers to be able to support such an environment. We have a conglomerate out in Indonesia who are saying that whether we want to or not, we need to remain relevant. And the only way for us to remain relevant, uptick our revenue, and be able to contribute to a GDP is via digital transformation needs. And manufacturer out in the Philippines, for example, looking at different manners for business continuity. How do I then develop my organization on digital fundamentals to ensure that my factory, my shop floor is continuing during this period? If the wave continues to move on towards the Q1 of 2021, is my shop floor, is my manufacturing plant still going to be able to operate? And that's what's going to be critical for a lot of these organizations in terms of a thought process. So in understanding all of that and understanding how these individual organizations are pivoting, looking at how they are now spending on technology to respond, to adapt and accelerate during this pandemic is very, very critical. Our data is showing that 34% of ASEAN organizations are spending on IT simply because of what the crisis has caused their organizations to suffer at this point in time. So they're plugging a gap. For adaptation, we see organizations at this point in time, 25% of ASEAN organizations, who are now looking at the holes that the pandemic has poked within their organization and how this can now be filled via digital means. And ultimately, towards the acceleration point, we're seeing close to 25% of ASEAN organizations as well, starting to spend on IT and technology initiatives that's going to help them accelerate back into the market. Because ultimately, it's about surviving and thriving and pushing towards a digital economy. Now, we found this extremely synonymous across all sectors in ASEAN. Majority of sectors were hard hit. In fact, our predictions around IT spending is seeing a huge contraction of close to 8%, minus 8% in terms of IT spending. But the shift in targeted IT spending to help the organization return back towards whether it is uptick of revenue, towards becoming more profitable, about reducing costs, and ultimately set them back on track in being a future enterprise and enabling themselves to contribute towards a digital economy, that seems to be top of mind at this point in time for a lot of businesses. So with that said, once again, business resiliency for us is your word of the day. If you were to step back right now and you were to go back to your organization and you were to sit down with your peers, with your managers, with your C-level individuals, as well as the board, what would be very critical for you now is to not skip the point around business resiliency. The resiliency of your business is contingent on the idea that this is what's going to help you raise yourself out of the current situation and pandemic and the crisis that we are looking at this point. Globally, and even down to Southeast Asia Pacific as well as Southeast Asia, we're seeing governments take the step to help a lot of businesses be resilient. Therefore, the first step in a lot of what you view yourself to be doing over the next 6 months needs to have the core of the idea steeped in the notion of business resiliency. With that, I thank you very much for your time and all the best in your future. And I hope all of us will gang together, come up with great ideas and be able to stave off the pandemic for success in 2021. And I look forward to your questions for the rest of the day.
Thanks so much, Sudev. Certainly I've taken away that key message on business resiliency. And I think it's fascinating that the key message there as well is how can businesses and economies make that shift from crisis reaction to a more proactive series of measures in what you call the race to recovery. So again, please, if you have questions that you would like to put to Sudev, please put them through the chat function or the question function in Zoom or through our Facebook page. So next and third, we have our final presentation from Professor Jamal at UKM. He's going to take more of a macroeconomic perspective in terms of what does the crisis mean for globalization, for trends, for the economic model that has seen success in the past in Selangor, Malaysia, and ASEAN, and what will perhaps need to change as we look towards this new normal in a post-pandemic world. So with that, let me hand over to our third and final presentation in today's session. Over to you, Professor Jamal.
Thank you, Richard, for the generous introduction of me. And good morning, everyone. First, I'd like to thank the organizer for considering me to make a sharing in this distinguished event, the Selangor ASEAN Business Conference. I have some slides. I prepared some slides for my presentation. First, I'd like to enlighten the audience that the pandemic economy, as we are facing now, is fundamentally a health crisis. It is not the typical economic crisis that we faced before. For example, in the crisis of 1985, 1998, and 2009, they were all fundamentally caused by distortion and weaknesses in the economy, in particular in our economic structure. Let's see some of these crises. First, in 1986, or rather in 1985, we faced the so-called commodity crisis, whereby commodity prices crashed and our GDP grew by -1%. It was a contraction, although a slight contraction. And then in 1997 and 1998, we faced the financial crisis, where our GDP contracted by some -7%. And in 2009, we faced another financial crisis where our GDP contracted by some -1.5%. All these are, I call it the typical economic crisis, where we can explain them. We can use various economic theories to help explain the cause of those crises and the remedies that need to be taken by governments in order to rectify, in order to take back the economy to its normal trajectory. However, the current economic crisis, as we are facing now, I call it the pandemic economy, is fundamentally not an economic crisis, not due to any economic distortion or not due to any macroeconomic weaknesses, but it is rather induced by health risks, by the health effects of the so-called COVID-19 or coronavirus. And this particular health risk, it distorts supply and demand simultaneously. Not just supply, not just demand, but both of them are being distorted. Both of them are being disrupted by the health effects or the health risk made by the spread of the corona-19 virus. And also we are seeing how these health effects or health risks affect the domestic and global supply chain simultaneously. Not only the local supply chain is affected, but the global supply chain is also affected, and this happened simultaneously. And I would consider this crisis as a kind of unprecedented, not precedented before. And I've shown this. And if we look back at the, at the so-called economic or financial crises of the past, many economic theories have been used to explain the phenomenon. And for example, we can see how investment to GDP ratio, gross capital formation to GDP ratio, how the changes in the exchange rates may lead to the so-called macroeconomic crisis of the past, and from there, economic policies or remedies are being proposed to provide remedy to the crisis. However, for the current pandemic economy that we are seeing now, it's difficult in the first place. It's difficult for us to make the projection of GDP growth, and because a lot of it is contingent, is dependent on to what extent our economy will recover from the lockdown due to this pandemic, due to this spread of the corona-19 virus. However, I've made some attempts to look into the possible GDP impact of this pandemic economy to Malaysia. And you can see from this chart that for the first quarter of this year, our economy grew by 0.7% in real terms. This is an actual figure, not projected. And in Q2, our economy grew by -17%. And for the third quarter, which is the present quarter, I projected that our economy will rebound a little bit. However, it's still in the negative growth territory. I would think that the third quarter we will see our economy growing at -8%. It's much an improvement, but still in a negative territory. This would confirm that our economy is in a recession, having seen growth in our GDP, negative growth in our GDP for 2 consecutive quarters. And for Q4, I would think there'll be a slight positive rebound in our GDP growth. Based on my estimation, our GDP would grow by 0.4% in the fourth quarter. This is on a year-on-year basis. And overall, this year, our GDP will see is projected to see a fall, a contraction in growth by 6%. So we may see our GDP growing at a negative rate of -6% in this year. However, for next year, I foresee from my sense, from my estimation, our economy will rebound very much at 5.1% based on year-on-year estimation. So you can see that our recovery will be a kind of V-shaped recovery. Now, economic remedies, when we talk about economic remedies to rectify the pandemic economic, I would think there are a number of I would say appropriate approaches, which is quite a departure from the traditional prescription of macroeconomic policies. And I listed a number here. I think this is also pertain to ASEAN as a whole, not just to Malaysia. First, very important for countries to protect employment, and for the case of Malaysia, there has been a number of remedies in order to protect employment through the provision of wage subsidies. And to sustain consumption is also important, such that consumers would be able to still consume in order to sustain, or in order to provide a buffer to the economy not to fall further. And this has been also considered by Malaysia through various approaches. And of course, essential services must be maintained, like, for example, transportation, agricultural production, retails, and of course, government services, the essential ones. And production incentives, particularly for the food sector, has been our prime approach to stimulate or to spur our economy from the pandemic. And cost optimization, this is especially relates to wages subsidy provided to mainly our SMEs, and also the so-called loan moratorium, is also something very helpful that helps cut costs to our SMEs. And digital transformation, we are seeing that happening. Is very important for governments to look into this very seriously. We need to spur up our digital economy. And lastly, that I can think of is the importance of governments to be ready for higher fiscal deficit. The next question is globalization still relevant to us, in particular for ASEAN, whether or not our strive to see ASEAN as a single market and to see a single production base under the so-called ASEAN Economic Community, is that going to be a relevant thing still? Yes, I think our strive Our aim to see ASEAN as a single market, as a single production base, ASEAN as one community, one economic community, will still be relevant, particularly for Malaysia. Malaysia has been a trading country for long. Since independence, our trade value constitutes more than 100% of our GDP. And trade has been very much synonymous with our economic growth. The same with FDIs, the inflows of foreign direct investments, they have been synonymous with our economic growth. And you know that ASEAN its combined GDP is about 8.5 trillion in terms of US dollars purchasing power parity terms, and that is about 40% of US GDP. So this is huge, and you know also that ASEAN's population is more than 600 million. So we can afford to see ASEAN as a scattered market. We have to see ASEAN as one single market, and the so-called ASEAN economic community is something I think which is very relevant for us to pursue. However, when we talk about FDIs, perhaps it's not any kind of FDI that we shall welcome, but the kind of FDIs that would help link up with the regional supply chain or with the domestic supply chain. And we need this kind of FDIs that binds or that links up, the global supply chain with the regional supply chain, not FDIs or acquisition and mergers. They would end up with our country being, a place to assemble products.
Great, thank you very much, Professor, for that insightful presentation. And I think raised an important point that if we are going to see a successful rebound and recovery in ASEAN, it requires not just proactive response by the private sector, but also appropriate public policies by government to ensure that we can effective and sustainable recovery is facilitated. So I'd now like to invite all of our panelists to rejoin the discussion. And I see we've had a series of very interesting questions that have been submitted by all of you. Please do continue to send in any questions that you have. And in the remaining just over 15, almost 20 minutes, I think I'll try and ask our panelists to speak to as many of those topics as possible. Given the amount of time, I would ask our panelists to be as brief and concise as possible. And so I'm going to start off, Sui, first with you. We had a question that came in asking about, is there a new trend or focus sector for outward investment from China into ASEAN? So perhaps sort of really looking at the post-pandemic changes and dynamics that we might be looking towards. Over to you, please.
Yeah, thanks, Richard. Thanks for the questions. I think certainly there is, I think in the presentation that I did just now, I think we do talk about some of the future trends. I think one of them is obviously the technology-led investments, I think by Alibaba, Tencent, and the rest. Our view is that I think this trend is going to be more obvious, and the M&A transactions in the TMT sector is going to become more and more common by the Chinese company. This is really leveraging on their so-called digital economy and their digital expertise that China has built up in the last 10, 15 years. The other trend that we are seeing is obviously in terms of the electric vehicle batteries, the EV batteries in short. I think we are seeing a lot of investments, not only by Chinese company, but by Japanese company as well in Indonesia for the battery-grade nickel productions. I think in the past, we have seen a lot of Chinese company going to Indonesia to build their nickel smelter, more for the steel manufacturing. But the current trend is that they are going there to build nickel smelter as well, but more for the battery-grade nickels.
Great, thanks so much. The next question I have, I think is probably best directed to you, Sudev. And the question is, there's much talk about the new normal. And I think you even mentioned it's becoming one of the overused terms in your presentation. And then, so the question continues, in the rebuilding process, do you think there will ever be a return to normal?
That's actually No, it's a very good question. We've been getting that a lot, and in fact, just last week I had a conversation with a very large organization in Malaysia, asking that hypothetically, if a vaccine is found right now, would everything get back to normal? A lot of our survey data suggests across Southeast Asia and Malaysia in particular, it looks like everybody is getting comfortable to working at home. A lot of people are enjoying the point of being able to balance their work and their personal life a little bit better. It's slightly split in between, but we do anticipate that virtual work at home environments or building of employees working from home as well as in a physical location to continue squarely through to the end of 2021. The sentiment across Southeast Asia seems to be trending that way, and majority of organizations are going to keep that in place and have introduced HR policies to ensure that is in place through to 2021. So it looks like it's going to continue.
Okay, so maybe even for next year's Selangor conference, we might be doing something like this. Actually, while you're still on the line, there's another question which I perhaps direct to you as well, Sudev. And again, the participant asks, digital transformation usually leads to lower headcount requirements. How can we protect employment? I mean, again, I guess the question is, how can we ensure that digitalization is a positive force from a labor market perspective?
Right. There's so many points to expound on that. I think there's been debated a couple of times. I'll try to keep it a little bit short. But I guess the statement is true to a certain extent, but in many instances, when we see around manufacturing, for example, when automation comes in and there's a move away from just having so many people on the shop floor doing very redundant type work, robotics tends to be introduced, or automation tends to be introduced very quickly to just get rid of redundant work. It's that mentality where it takes a lot of labor to actually do something. The laborious work then is converted into something a little bit more of higher value. So if you look at Malaysia and you look at the evolution of the manufacturing industry as well, and even the semicon industry and how that went up the chain towards higher value, Taiwan is a classic example of that as well. You can see the upskilling of individuals, the upskilling of the current workers to be a very critical point for governments to relook in terms of the evolution of a worker towards a higher value income nation. So Malaysia has been doing that for a while. ASEAN in general, governments should start doing that and looking at that. But like I said, there's a lot of points to expound on, but that's just one classic example to cover.
Oh, great. Thanks so much. Prof. Jamal, I've got sort of two questions which I'd like to sort of combine to hand over to you, if that's okay. And I think they're related, but you can perhaps tell me otherwise if not. So the first part of the question starts, the recovery of each ASEAN member country is at a different pace. And I think you also highlighted that we're seeing different countries recover and dip at different times. And Sui also sort of highlighted how China's dip came first and China's recovery is also coming first. So the question continues, what are some of the key factors that you think will influence the pace of recovery? And then perhaps while you're thinking about that as well, there's also another related question, which is when economic recovery will begin, has the government done too much or not enough? So perhaps a little bit more on the Malaysia perspective there as well. Over to you, Professor.
Not sure whether that was directed to me. Yeah. I presume it was directed to me. Well, my thoughts about that, what are the key factors that would determine the rate of recovery? I think from the macro perspective, from the macro point of view, it is the structure of the economy itself. If the economy is less open, it is open but relatively less. For example, the value of trade is much less than that of GDP, meaning that it is less connected to the world. The rate of globalization is much less. I think he has a better chance to recover faster, meaning that the more you see domestic supply chain relatively higher than being linked to the global supply chain, then that particular economy tends to recover better. In this case, Malaysia may not have the advantage over the neighboring economies because our trade value is much higher. We are much more globalized than many ASEAN counterparts. except of course Singapore, which is very much a service-oriented economy. But however, the good thing of economy of Malaysia, we are quite fast to to make a comeback, particularly when we talk about the RMCL. I think a lot of our economic activities have resumed now, although in terms of the global linkages is still much subdued. But production has now taken place quite well, and I expect that Malaysia will see a good positive trajectory by the fourth quarter of this year, simply because of that RMCO has given a lot of ways, a lot of possibilities for the economy to make a comeback, although not entirely back to the pre-pandemic situation. And also agriculture, the food sector in particular, has never failed us, and we are seeing that particular sector, in fact, grew relative to many other sectors. And I expect agriculture to make a better comeback by the fourth quarter of this year, including the plantation sector, as the world economy recovers.
Okay, terrific. And
that's my viewpoint.
The million-dollar question, or the million ringgit question, though, is government done too much or not enough, or perhaps it's entirely out of the hands of government?
Yeah, I think for Malaysia in particular, the government has done a lot. The government has done, I think, quite much, and we can't blame the government for the for the happenings for the pandemic economy. But so far, as I said, we are into a higher fiscal deficit, which reflects a lot of Malaysia's commitment to help the economy. Although perhaps much more can be done, but what has been proposed so far, I think, is really taking place. We can see the repercussions in the economy. We can see many signs of recovery in various sectors. Again, we can only do so much.
Okay, thank you. Right, I'm going to come back to you, Sui. We have during your presentation, you mentioned some of the sort of rock stars of Chinese outward foreign investment. Of course, Alibaba is the one that everyone knows about in Malaysia, given the efforts towards the DFTZ. And the question, or the comment, if you like, notes that interesting to note that despite Alibaba having a logistics center in Malaysia, they decided to build their data center in Indonesia. Why do you think that took place? I mean, what was perhaps Indonesia's advantage over Malaysia for that particular transaction?
Right. Thank you for the questions. I think we can look at it from a business strategy point of view. Indonesia is definitely the largest internet economy in Southeast Asia. I think there was a recent report, a market report done by Temasek and Google, where the report actually projected Indonesia internet economy expected to grow to about 130 over billion by 2025. So it's a three times growth, I think, from 2019, if I remember correctly. So if you look at both in terms of the size of the economy as well as the growth, Indonesia is no doubt, I think, the leading economy, internet economy in ASEAN, right, way ahead of other ASEAN countries. So from business strategy point of view, I think data center and logistics are two different business. I think data center is a very much localized domestic business. So the size of the internet economy in that particular country, I think, plays a very important so-called role in terms of decision-making, whether one should put a data center in Malaysia or in Indonesia. And I'm sure, I think if you read some of the reports, Google has announced that they're going to introduce cloud services in Indonesia. Amazon as well, AWS, they're going to introduce their cloud services in Indonesia. So it looks like there's a lot of demand for so-called cloud computing in Indonesia, and the size of the market, I guess, justify for Alibaba to make that kind of move to build not only one, but 3 data centers in Indonesia. Whereas I think if you look at the logistics center in Malaysia, logistics is more of a regional distribution capability. So from business strategy point of view, I think it makes sense to have the logistics center in Malaysia, especially for Alibaba, because after they bought Lazada in 2016, that logistics center is supposed to serve Lazada. And if you look at Lazada operations in ASEAN is basically 6 countries, right? Singapore, Malaysia, Indonesia, Philippines, Thailand, and Vietnam. So having a logistics center in the middle of all these countries or markets that they are serving, I think makes a lot of sense. So I think that's why the decision led to having a data center in Indonesia and then a logistics center based in KL.
Okay, so it's not just about sort of the comparative advantages of different countries, but also the size of the domestic market and issues of geography as well that will need to be overlaid. Okay, there's another question, I think a tricky one, which I might ask you, Sudev, to have a crack at, which is what about the environment? And I think that's pretty much in the context of digitalization. So will the environment be the biggest casualty when everything else is cut costs to optimize? That's what the question says. And I think perhaps maybe the subtext is, how can we ensure that digitalization and the advent of the digital economy is a positive force in terms of the environment and sustainable growth and development?
Right. So I think that's slightly related to the earlier question as well. And if we want to talk about data centers, I mean, Sui was spot on in terms of it's business, isn't it? I mean, it's simple economics. I'm going to start up and place my data center in an economy that has much, because cloud ultimately and data center is going to be a volume game. So ultimately, I'm going to set up in a place where I'm going to derive the volume. And touching on that to your question, when we talk about the environment, like you said, it's tricky, but majority of technology providers as well as organizations have a commitment towards sustainability at this point in time. It is part of their service towards the government, their promise towards the government, as well as increasingly what we've seen now from organizations who want to adopt services from these tech providers is become a selection criteria. So it's become very interesting. So myself as an end user, when I go and speak to these technology providers, it actually occurs to me to want to talk and ask and accept your sustainability strategy as well, so that I am doing my part, being an organization A, B, whatever size I am in, to be able to then play my part towards sustainable goals of a given nation, or as an organization giving back towards nations. So we see that as part of a like I said earlier on, a selection criteria. We see this as part of a consideration for an organization to work with a technology provider. But the good news for a lot of tech providers is that they have infused that within their environment of provisioning of services. So data center, for example, there are a lot of standards around ensuring that it's compliant with environmental standards of the given country they operate in.
Okay, so there's definitely a positive pathway that we can look towards. I have another question here, which I'm going to ask you, Professor, to have a crack at. And I guess it sort of speaks to this issue of competition or cooperation within ASEAN. And the question is, how can ASEAN countries help each other without jeopardizing their own domestic economy, or will they be competing with each other? And I mean, my suspicion, of course, is, in the challenge of a pandemic, how can we ensure that regional cooperation continues, and we sort of avoid a race to the bottom, if you like. Over to you.
Yeah, I think we all know that ASEAN already has an ASEAN economic blueprint under the framework of ASEAN Economic Community, where we outlined a number of dimensions, a number of areas to spur cooperation within ASEAN countries. That would include ASEAN as a single market, single production base, cooperation in education, cooperation in tourism, of course, cooperation in our natural resource sector, which is basically our main strength. So we have that blueprint already. So the pandemic economy is really not an economic one, as I said. It's mainly about the health effects of the coronavirus. Once this pandemic is being contained, when it goes away, hopefully, and I think we'll be back to thinking of realizing what we have planned before. But of course, considering also the potential possibilities of this pandemic to make a comeback. But it will be a kind of a new norm. But we would never ignore our aims, our aspiration that we had made before the pandemic came. So I believe it's a matter of being able to contain, the pandemic and be able to to come back, we sit down together and relook what we have already that we have agreed on in the past before the pandemic came. So I think that's my thought about it. It's not going to be a new thing. It's not going to be a new venture, but we have talked about it years back.
Okay, so we can very much hope to see that ASEAN integration staying the course and perhaps even being strengthening in the context of the pandemic and its response.
Yeah, I do believe with the ASEAN Economic Community Blueprint, due to a lot of areas where we have much in common. Of course, there are disparities, economic disparities within ASEAN, but again, in the long run, that will be somehow rectified via the blueprint, the ASEAN Economic Community. Yeah.
Okay, no, thank you very much, Professor. So I'm afraid, everybody, that's about all we have time for. It's already, I see, clicking over to 12:31, which is the scheduled end time of our discussion. I hope you've enjoyed it as much as I have. I won't try to sum up, but I think we've had some fascinating and insightful perspectives, particularly on the challenges and opportunities that exist for ASEAN region in the orbit of China. I think the positive role that digitalization, particularly accelerated digitalization, can play in the rebound and recovery that we expect and hope to see, not just in Malaysia, but across the region, and the importance of public policies from governments to ensure that rebound is sustainable and the type that benefits everyone in the region. So with that, perhaps maybe I can just finally express my thanks to Dato' Tang for the opening remarks, to our three distinguished panelists for being so generous with your time and sharing some of your thoughts and wisdom, to the conference organizers, and of course to all of you who are connected, participating in today's discussion. Thank you very much, and look forward to the next discussion as part of the conference series. Thank you.
Ladies and gentlemen, we have come to the end of our webinar for today. A big thank you to our moderator and speakers. On behalf of Invest Selangor, we would like to thank all of our audiences for making time to be with us today. Be sure to join us again as we give you more insights on ASEAN in our next webinar series that will be on the 15th of September 2020. Once again, thank you and have a good day ahead.